Yo, Market Scraper here. Tesla shares have just gone up over $36. Why did that happen? What is this new common stock offering of over $2 billion that Elon Musk just said he's going to do, and even though a couple weeks ago he said he wasn't going to do, and all these crazy moves? Well, let's jump into this. Yo, before we jump into this video, don't forget to smash down that like button. It really helps with this channel, helps other people see this content. And if you haven't already, don't forget to subscribe. We really appreciate it. Okay, let's get into this. So what's a common stock offering, first of all? So common stock offering is when companies offer additional shares of their company to raise funds. And so what Tesla is doing here is that they're raising $2 billion worth of common stock. And so how many shares is that? That's, well, 2 billion divided by around, let's say it's 750. It's been kind of where we've been floating at recently. That's like 2.667 million shares, something around that. And the dilution of the shares from the current outstanding shares would be a little bit less than 2%. Do we worry about dilution? I think people worry about dilution a little bit too much. I'm not too worried about dilution, especially in this case, because I think sentiment is everything. And the reason why you'd be worried about selling not into strength. So right now we're definitely in a position of strength. Having Tesla shares at near all-time highs right now, definitely all-time highs at a really high price, and selling these shares. So first of all, it makes the dilution of each individual person's ownership of the company less. And so what is this dilution of the ownership? Let's see. So if you own a share of Tesla, let's say that if there were, I didn't check how many shares they were right now, but there's a little bit less than this, but let's say there was 200 million shares and you own 1/200 millionth of the company. And well, if the shares are, if you dilute the shares by less than 2%, let's say it's 1.8%, then you will not own 1/200 millionth of the company anymore with that one share. You own a little bit less, 1.8% less actually. But what really matters is so you can care about that if that's fine. Anyone has the right to care about that. But what really matters for me and for most people is, let's get a brass taxes here. What is my equity going to look like? Is that going to go down by 1.8%? Is that going to go up? So that's the real question. And there's no real reason why the equity needs to go down here. And I'll explain a little bit why the equity isn't really associated with the dilution of your ownership of a company in a bit. But first of all, it all has to do with sentiment. That's my main point here, before we get into the math of why it's not the case. Okay, so the sentiment here is, first of all, Tesla's doing this in a position of strength. And the reason why that's so important is because it's more like the underlying reason of why they're getting the money and what they're going to use it for. This is the real big reason. So if they're using the money for, let's say, a Gigafactory in Texas, because Elon just tweeted recently about a Gigafactory in Texas. And so what's so good about using that money for something like that, or maybe something to do with their new battery technology, is that it has a really strong purpose and there's going to be a big return on that investment. And the reason why, if you're doing it in a position of weakness, let's say when the shares are lower than they were maybe a year ago, for example, then there's concerns of why you're doing that. Is it just to pay the bills? And that, if you're just doing it just to pay the bills and you're doing it just to stay afloat, there's not so much perceived value in that. And that's why when a lot of companies issue common stock just to keep the lights on, and it doesn't show confidence in the company, and it shows more like, oh, it's just it's a matter of time until they go bankrupt, for example. Therefore, the sentiment's pretty low. And another reason why the sentiment will probably be high here is that Elon Musk tends to always buy some shares during this opportunity, and so he committed to buying 10 million shares in this offering. And so that bodes to confidence and to sentiment. It's not a lot of money in the grand scheme of things, but again, sentiment is everything. Okay, now let's get to the reason why I think that, and mathematically why it doesn't mean that shares should go down like 1.8% or anything like that. Because if they are offering this price of the stock at a fair price, let's say the shares of Tesla in, whenever this offering happens is like $750, and they're offering this for $750, for example. If you're offering all these shares for $750, and they're bought for $750, then that money is exchanged from shares and the company gets the $750. Therefore, all the value is still in the company. And therefore, your equity shouldn't be diluted in terms of the equity value. The money price tag on that should remain the same because money just exchanged hands there. Again, of course, your ownership of the company got diluted, but not necessarily your theoretically your equity value. And in the cases of how stocks have responded, it's in line with that. It's more the sentiment if the company is going to be using this for something really important and we have confidence in the company, or again, more so the reverse, like I mentioned before. So that's the reason why I think people put too much worry about dilution there. Obviously, it's a concern depending on what the situation is. And let's look at the charts and see where Tesla stock has had these common stock offerings in the past and how that's impacted the price in the following days and months. So let's look over here. This is Tesla chart. So in 2015 here, we see here, this is one of the offerings we had here. And the stock shortly after, and this is a position of pretty good strength in terms of the historical trends. So the stock looked like it went up a little bit and then it went down. It's kind of hard to say that it went down because of maybe Tesla specifically. 2016 was a point where the stock market kind of hit a near-term low. So I don't think that was really related to that offering. Okay, now let's look at 2016. So 2016, we had the offering, and then it just went down a little bit, and then went up, and then it continued to go down. So there were headlines here that there were concerns that this offering here was at a point of weakness. You know, it was even at a lower price than the year before, and so the sentiment wasn't the best at this time from the articles that I've read. So this could have had something to do with the decline of the stock a little bit, but we can see from when they had this, it definitely went down in the very short term, absolutely. Okay, now let's look at the next time that they did this. In 2017, we can see here that it was definitely in a position of strength. And it had a clear purpose here of the Model 3 ramp up that they were doing. So that was definitely probably a pretty decent catalyst that helped this stock keep going up. So there's definitely a parallel there to where we are now, definitely in a position of strength, definitely helping a ramp. In this case, it's going to be the ramp of the Model Y and other cars in the near future, and maybe a factory. So I see that more as what's happening here. Do I think it's going to shoot up again that dramatically? I do not think that's going to happen. I think that it's just not going to hurt the stock here. And clearly it's gone up since this offering was announced. And I think it's just going to help the stock price here, and we've seen that in the share price from today. Well, let me know what you think about this offering and this dilution, and are you worried about it? Do you think it's a great idea that they're doing this? Let me know in the comments below, and thanks for watching. I'll see you guys next time.